September 3rd, 1929. The Dow closes at its all-time high, 381. 18 months later, it's down 89%. Almost 9 out of every $10 invested in American stocks, gone, wiped out, families ruined, homes lost, futures stolen. And here's the part that freezes the blood. Right now, November 2025, the market is doing the exact same dance. All-time highs, endless headlines screaming new paradigm. Your 401k looks fatter than ever. Your house price keeps climbing. But behind the curtain, the smartest money on earth is running for the exits. Warren Buffett is sitting on $325 billion in cash. Corporate insiders are dumping shares at levels not seen since 2007. Margin debt is kissing the same red line that triggered 1929. This isn't a warning, this is pattern recognition. And the pattern says you have roughly 18 months before most of your wealth evaporates, just like it did then. Unless you understand the 6 stages that always play out when a bubble dies. 6 stages that crushed the middle class in 1929 and are lining up again right now for you. Tonight, I'm going to walk you through every terrifying month of that 18-month death spiral. Then I'm going to place today's calendar right on top of it, so you can see exactly where your money is in the countdown and what you still have time to do before the trap snaps shut. Picture the dollar standing at the edge of a cliff. It doesn't know it yet, but the ground beneath it is already crumbling. This is stage 5, the moment the market touches its final all-time high while the smart money quietly slips out the back door. From this exact point, history gives us 18 months, no more, no less, until the majority of the destruction is complete. 6 brutal stages that repeat with cruel precision every time a great bubble dies. Stage 5, the euphoric peak, September 1929, November 2025. Stage 6, the crack, October 1929, December 2025, January 2026. Stage 7, false hope, November-December 1929, January-February 2026. Stage 8, the grind, January-June 1930, March-August 2026. Stage 9, acceleration, July-December 1930, September 2026, February 2027. Stage 10, capitulation, January-March 1931, March-May 2027. 18 months from the first insider exodus to the day the middle class is forced to sell everything at fire sale prices. By the 18-month mark, the Dow was down 58%. But the final bottom came later, 89% gone. The first 18 months are when most families lose their homes, their savings, their ability to ever recover. This pattern is not a theory. It is mathematics dressed as history. Leverage must be purged. Valuations must return to earth. And when belief is the only thing holding prices up, belief always breaks the same way. We are in stage 5 right now. The countdown started the moment the last insider finished selling. You have 18 months until the wealth transfer is mostly over. 18 months until your mortgage feels twice as heavy, your rent jumps again, your grocery bill hurts, and your retirement account looks like it belongs to a stranger. But here's the strange part. Almost nobody around you will believe it. Not yet. They didn't in 1929 either. And that disbelief is exactly what makes the next 18 months so profitable for those who see, and so devastating for everyone else. September 1929. The newspapers screamed permanent prosperity. Wall Street's greatest minds spoke of a new era where stocks only rise. On the surface, America had never been richer. But beneath the roar of the ticker tape, the insiders were already gone. Joseph Kennedy, father of the future president, liquidated everything after a shoeshine boy gave him stock tips. He saw the madness. Bernard Baruch, the lone wolf of Wall Street, converted his fortune to cash and bonds. Corporate directors unloaded 50, 60, 70% of their holdings, not diversification escape. European banks had been quietly shipping gold home for months. They remembered the South Sea bubble, railway mania, every fever that ends the same. Margin debt had swollen to 8% of GDP. A 10% drop would wipe out every borrowed dollar. Earnings had already peaked 3 months earlier, yet prices kept climbing on pure belief. The real economy was rolling over, factory orders falling, commodity prices cracking, while the market floated higher on nothing but hope. Then came October, the first crack. A sharp sell-off, a frantic banker's pool at JP Morgan, a bounce, headlines shouting crisis averted. Then Black Monday, Black Tuesday, 25% gone in 48 hours. Margin calls rained like shrapnel. Men who were millionaires on Friday walked home penniless on Tuesday night. But here's what almost no one tells you. The crash wasn't the killer. The crash was the warning shot. What slaughtered the middle class came after, November-December 1929. The dead cat bounce, the market stabilized, even rallied. Newspapers declared the worst over. "Buy the dip," the brokers said. Thousands who had sold in panic bought back in. Thousands more who were underwater averaged down. They smiled at Christmas, believing they'd dodged the bullet. They hadn't. Under the surface, banks were bleeding from bad stock loans. Credit tightened, factories slowed, layoffs began, quietly at first. Unemployment crept from 3% to 8%. Farmers couldn't sell crops for the cost of seed. January through June 1930. The grind. Month after month, new lows, every small rally crushed, every piece of good news drowned by worse news. 600 banks failed in 6 months. No FDIC. Your life savings. Poof. People stuffed cash in mattresses, which forced more banks to collapse. Hope died 1 percentage point at a time. July 1930. Acceleration. Exhaustion turned to panic. Mutual funds faced redemptions and sold anything to raise cash. Insurance companies dumped holdings. Prices fell so fast the ticker couldn't keep up. By December, another 1,000 banks were gone. Bread lines stretched around city blocks. Hoovervilles rose on the edge of every town. March 1931. 18 months after the peak. The Dow closed the period down 58%. Most middle-class families were financially broken. The wealth hadn't vanished. It had moved. Kennedy, Baruch, the old money, they bought entire companies for pennies on the dollar. The greatest transfer in American history was already complete. And the terrifying truth: every signal that flashed red in 1929 is flashing red again, brighter. November 2025. Look at the tape. Same movie, different decade. Corporate insiders just sold more stock than any moment since 2007. Not tax moves, not portfolio rebalancing. Liquidation. Executives who see the real books before you do are racing for the exits at a 20-to-1 sell-to-buy ratio. They know. Warren Buffett is holding $325 billion in cash, the largest cash pile in Berkshire's 60-year history. He sold half his Apple, slashed Bank of America, and sits on the sidelines with more dry powder than he had walking into 2008. He's not scared. He's waiting. Margin debt is 7.9% of GDP and climbing. One more nudge, and it kisses the 8% line that triggered every major crash of the last century. When it crosses, the math takes over. A 10% drop wipes out every leveraged account. Brokers don't ask nicely, they liquidate. Prices fall further. The spiral begins. Valuations are worse than 1929. The Shiller P sits at 35. You are paying $35 today for every $1 of real earnings, twice the historical average. Only 2 other times in 150 years have we been this expensive, 1929 and 1999. Both ended with 50-89% losses. Earnings are already rolling over. Q3 2025 came in flat. Q4 guidance is being slashed quietly. Manufacturing has contracted 3 straight months. Commercial real estate is detonating, empty office towers, walking away from billions in loans. Regional banks are bleeding the same way they did in 1929 and 2008. 3 failed this year, more are on the edge. And the psychology, identical. Your brother-in-law swears the Fed has your back. Cable news runs segments titled, "Why This Time is Different." AI is the new radio or internet, the miracle that justifies any price. When everyone believes risk is dead, risk is about to have its greatest feast. We are not approaching stage 5. We are living it. September 1929 is playing out right now in November 2025. The insiders have finished selling. The leverage is maxed. The divergence between prices and reality is complete. The 18-month clock started ticking the day the last smart dollar left the building. Your savings, your home equity, your retirement, everything you've worked decades for, is now on the same conveyor belt that carried the middle class of 1929 straight into the abyss. But here's what chills the bone. This time the system is bigger, more leveraged, and more fragile than 1929. There are more dollars to destroy, and when they vanish, they won't disappear. They will move, quietly, legally, relentlessly, from the hands that need them to pay rent and mortgages, into the hands that have been waiting with cash for years. March 2027, 18 months from right now. That is the moment the pattern says most of the bleeding stops, and most of the wealth has already changed hands. 60 to 70% of stock market value gone. Trillions transferred. Your 401k will look like it was hit by a flamethrower. Your house, if you still own it, will feel like a chain around your neck. Unemployment, 12 to 15%. Breadlines with better smartphones. The crack comes first, December 2025 or January 2026. 1 week, maybe 2, of pure panic. 10, 15, 20% erased while you watch. Then the false rally, January, February 2026. The one every talking head calls the buying opportunity of a lifetime. Ignore them. They are selling hope so someone else can sell stocks. Then the long grind, March, August 2026. A new low every month, every bounce dies. Layoffs announced in the thousands, then tens of thousands. Regional banks start vanishing on quiet Friday nights. The FDIC fund runs dry somewhere around the 12th failure. After that, even insured deposits become a prayer. Then acceleration, September 2026, February 2027. Capitulation. The moment your neighbor who swore buy and hold forever finally breaks and sells everything at 70 cents on the dollar. That sale pushes the price lower, forcing the next neighbor to sell. A cascade no policy can stop. By May 2027, the middle class will have financed the greatest yard sale in history. The same names that fled in 2025 will return with cash, buying apartment buildings, factories, blue-chip stocks at 30-40 cents on the dollar. They won't gloat. They'll just quietly compound for the next 30 years while everyone else tries to rebuild from zero. You still have time. Barely. De-risk now, before the first crack. Move to cash or short-term treasuries. Let the storm pass. Then when the headlines scream apocalypse and your friends think you are re-insane for even looking at stocks again, that is when you buy. Slowly. Methodically. The same way Kennedy did in 1931. The same way Buffett did in 2009. The same way generational wealth has always been built. By having cash when blood is in the streets. The pattern is merciless. It does not negotiate. It does not care about your plans, your kids' college, your retirement dreams. It simply executes. 18 months. The clock is running. And when it stops, the question will no longer be how much you have left. It will be whether you are on the side still holding the dollars, or the side that just handed them over forever.